Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the boys from Convoy, Dustin and Jonathan. How you guys doing?
Good, good. How are you?
Hey man, I'm really excited for that second slash HELOC you guys are creating. I'm gonna get me a piece of that once it's done. So look forward to that update on our next call. But what I want to do here is, you guys talk with a class and a set of experienced investors that I don't. I have no relationships with some heavy hitters. And I'm just curious, off the record, what are they telling you? What are they talking about? Are they scared? Are they excited? What are these big shots really, when you're just having a casual conversation, what kind of inkling are you getting from them? Because again, Main Street is freaked out, but the 1%, I don't know. Are they freaked out? Are they not? What's going on? What's the tea leaves look like?
I think, a lot of, I mean, with Dustin, you can add on, but a lot of our clients that are, higher net worth or kind of the, even the lenders that are, that usually do like private portfolio loans, they seem to kind of they are freaked out. They're kind of watching everyone, run like their hair is on fire.
But they're up here just watching everybody, right?
Yeah, basically. But they themselves are just waiting for the opportunity, right? Because they know that this is the opportunity time to buy as an investor. Yeah. Something that they couldn't purchase before with all the competition. So I think we've talked about it a lot of times in the past, but a lot of people should be excited for this moment if you're an investor, because you're going to get better deals, right? Obviously, like you said, Main Street and Wall Street a little bit, they're just freaking out. They're freaking out and they're part of the group, and I think they're adding to the panic that doesn't really help anybody. But with the rising interest rate environment, with inflation data that just came out, which Dustin can touch on, like it's kind of nuts on the normal streets that everyone is on. And while the ultra wealthy are just kind of just waiting out and seeing what happens, because they know that this is cyclical. This will pass too, and over the long run, they're just going to continue to invest, keep going their plan.
Yeah, Dustin, what are you hearing in your conversations?
Yeah, I mean, the buyers and if we'll call it this, using a stock kind of analogy, the market makers of non-QM originating loans are telling us to lock everything ASAP. If we get a loan in, we're locking it right away. Like, sure, the client may not know because we haven't had the time to speak with them because they're at work and they call us back 3 hours later. We're locking it right away because you're not locked to that rate. You're locked on that specific rate sheet for that day. So we can move it up or down. But the risk that we're putting ourselves in is if we wait to hear back from the client, the chances of that rate even 4 hours later being higher is a lot higher than that rate being lower 4 hours later. Yeah. So we're locking everything in ASAP. And that's what everybody that we're at least negotiating with on the secondary market is telling us is stop playing, stop trying to think and hope and pray that there's going to be another little mini dip for one day so you can lock a better rate. It's not worth the risk. And, with CPI yesterday being at 9.1, obviously, I think that's the only thing we've seen on the news the last 24 hours. I honestly, maybe I'm taking a crazy shot here at it, or you tell me, you've been in the market longer than I have, but I think how we saw the market react to it yesterday was great. Everyone freaked out when it first came out at 5:30 in the morning our time, right? And it's an ugly number, but when you look at how, if you actually pull up the CPI chart and see how heavily weighted energy and gas is, right, when you calculate CPI, kind of tells the whole story. Because everything else, sure, it did move month over month, but you're talking, I want to say, if I'm thinking about it, like maybe 0.5 to 1 or 1.5, which is still a lot on a month to month. But when you looked at, I think it was gas was at like 11.3, and I want to say energy overall was at 7.3, right? Yeah. And those numbers are heavily weighted. But we all know that the CPI numbers from yesterday was for June numbers, right? And the last 2 or 3 weeks, look at crude oil. It's drastically came down, and energy has. So I think because the market knows that those numbers were old, and now that the last 2-3 weeks have been better, that's why we kind of rallied the second half of the day. That's why it was kind of not as much of a bloodbath as it was the last time we heard CPI, right?
It was really, you're right, Dustin. I was lucky enough to have Matt, the mortgage guy, on yesterday. And I think the second video I did with him is how the hell could rates get better? Now, they didn't get better by a lot, but they got better by 10 bips. on a day where CPI came in hot, and it was
We woke up
because
scared.
yeah, exactly. Oh no.
Down 40 or 60 or something. I was like, oh great.
Oh great. Another bad day.
Yeah.
Yeah.
But no, I think it puts the Feds in it, because I think what were the number, like 72% chance now for 100 bip rate hike July 27th, right? And I think it's the Feds know that I think they know they can move it 100 bips now, and the market will be at least susceptible to it. Yeah. And I think this is the crazy shot I'm calling. It's going to put us in a position. I think the Feds might put us in a position to pivot sooner. Now, whether that's in 3 months or 6 months or 12, I think we're putting ourselves in a position to pivot sooner, at least. It'll be better for the overall market, because what if we do 100 bips in July, 75 in September?
Yeah, that puts us at 3 1/4, right? 3 1/4, yeah.
So, I mean, let's rip the Band-Aid off.
I agree. 100% I agree.
Yeah, and let's hopefully we'll be there sooner, at least be able to pivot. I don't know when, but it should be sooner if we can just tackle this right away.
Well, yeah, I think, and again, I don't know if you guys saw it, but Canada, I mean, I know it's not a market you lend in, at least I don't think so. They did 100 bases out of nowhere, right, yesterday. And their lending structure is a lot different, and their residential stuff, they have arms. They're really setting their housing market up for trouble. But I want to go back to kind of the Richie Rich, right? The 1% or the 1% of the 1%. I think Jonathan's image was dead on. They have likely been through multiple recessions, bear markets. There's a lot of folks, if you're under 36, this really is your first kind of, oh, wow, the economy can, shrink. We can have a bear market at the same time. Rates can go up. I've only been in an environment where rates will go down. What the hell? So we do have a lot of people that got what I'm calling rich the last couple of years, but they were just lucky. Luck left the building, right? Now we're going to start to see people who are swimming naked, i.e. Celsius, i.e. Three Arrows Capital. People who are borrowing on leverage are going to get smoked. Bad capital allocators in multifamily are going to get smoked. But again, the people that are watching, like I did, I raised a whole bunch of capital the last 6 or 9 months, sub 4% on purpose, told on this channel. And I'm going to deploy capital into environments where I don't have to put much at risk. We're talking at minimum, try to maximize it at 10% down, get those deal structures. And I'm excited for what's coming. But yeah, you're right. A lot of people that got like 8 years on them, they're running around scared. And every day they're getting more scared because, folks, your echo chamber. I can't believe so many people watch the same doom and gloom YouTubers. If you just watch that stuff and feed yourself negativity, you are going to miss opportunities of a lifetime. Bear markets, recessions are where you buy assets on sale. Get out of your negative echo chambers and realize the amazing opportunities you have coming. What do you guys think of that?
Absolutely. I mean, it's something we've been talking about, I think, for months, right? While this whole interest rate increase was happening, while everything was going on fire. I mean, we've constantly had the conversation, you and us, of that this is an opportunity point, right? People are getting better and better deals. And as the market continues to do this, they'll get even better deals, right? So again, things that weren't attainable 2 months ago are now going to be attainable, in the conventional space, in the non-conventional space, just across the board, right? So, maybe we'll start seeing, if something happens and the conventional market keeps getting better, we'll start seeing first-time home buyers come back. I mean, who knows, right? Anything can happen.
I have a prediction for you. FHA and VA buyers in Q4 of this year will do double or triple the transactions they did in Q1.
Wow.
Write that down, because it's just the market, right? You're going to start seeing cleaner inventory. I put up a video today of somebody who flips on my channel. He built it for FHA buyers. The whole market's changing. So here right now, FHA and VA buyers will do triple the transactions in Q4 than they did in Q1. Less competition. They're the only game in town. It's the opportunities are coming. What do you think, Dustin?
100%.
Yeah, I know. I mean, the opportunities are coming and they're here now. And, obviously there's a lot of mortgage companies right now that are struggling because of the decline in real estate transactions. And I'm not trying to, beat our own chest at all, but like, because we focus so heavy on investment properties and investors, we're busier than ever. The amount of pre-approvals that we're writing, for our clients right now, that are investors trying to purchase something that's been on the market for 30 or 45 days, and now they can get something that's 10 or 15% below listing, and the seller's going to take it. Is I don't even know. I want to say here, if I'm thinking about it right now, the amount of loans that we have in our pipeline is about, let's see, what's 30% increase from what it was 3 months ago when rates were probably 30% lower. And that's simply because of people like, your investors in your community doing the extra homework, finding the great deals out there, and not just, I guess, kind of sitting back with 50 other people making offers that are 10, 15% above listing,
Yeah. The environment, again, I got to tell, if you're an investor and you follow one rental at a time, or heaven forbid, you're one of my students, you have got to be excited. Yes, focus. Yes, daily discipline. Yes, you might write a few offers, but our job is to find the motivated seller, the need to sell, not the want to sell. I want to be very clear. Everybody watching my channel that follows what I do, we are no longer offering list price. I don't care if it just had a price drop. We may agree to list price if the numbers work, but our first offer is not list price. Second, we are asking for closing costs. We're asking for 100. We'll settle for 50. And I want your sellers to buy down your rate. I teach you to learn yield. Use every lever you have to make your yield better. This is your time. And again, I think FHA and VA will just take off in Q4 because all the other stuff is going away. I'm excited. And again, Dustin, I don't think you're trumpeting your horn enough. We talked about in video number 2, an exciting program. Why does that exist? Because you guys are investing in creating things the market needs. Investors have equity. They have crazy low firsts. They're not going to touch them. So what do? You invest the time and energy to create a second that allows them to tap that equity and not risk losing the first. So the reason Convoy's 30% busier is because you guys are doing the work. So, you need to be celebrated a little bit more and not just taking the easy way out, like, Sprout and all these idiots who were just built for, cash out refis. So congratulations for doing the work.
Thank you. We'll always continue to work. I mean, Convoy is, our baby. So Dustin and I, we don't sleep. We work 25/8. So
yeah, there you go. 25/8. Well, if somebody on my channel wants to reach out, see what's going on, be part of the 30%, potentially talk about the second video number 2, how do you want them to reach out to be taken care of?
Email privateclient@convoyhomeloans.com, and please let us know that you are calling from Horat so Dustin or myself can reach out.
Awesome, guys. Thanks again. We'll talk in a couple of weeks. Hopefully the second will be out.
Thank you.
Mm-hmm.